Are you considering buying a home and using an FHA loan? Maybe you're watching this video trying to figure out if FHA is the right loan for you. Well, in today's video, we're actually going to talk about some of the negatives of using an FHA loan. Now, don't get me wrong. If you've watched my videos in the past, you know I'm a huge proponent of using FHA, but you need to understand it. It's not for everyone, and that's what we're going to talk about in today's video. We're going to dive into some of the things that people don't really consider when they think about using FHA. And the very first thing we're going to talk about is the upfront mortgage insurance. Now, it doesn't seem like a big deal because that's just part of what an FHA loan is. Now, for those of you new to this video and new to FHA and new to the upfront mortgage insurance, I'm going to spend a little time here and just talk about what it is. When you buy a home and you use an FHA loan, FHA requires an upfront mortgage insurance premium. Now, this is outside of the monthly fee that they charge every single month when using an FHA loan. This is an upfront fee. It can be financed, so it's not paid necessarily out of pocket, but it's required on every single FHA loan, and it's 1.75% of the loan amount, and it's added back to your loan amount. And why is that such a big deal? It's because typically speaking, when using FHA, you're putting 3.5% down. So if you're buying a house, you're putting 3.5% down, minimal down payment, you're getting to the home, not really a big deal. But that upfront mortgage insurance premium is eating up almost half of your down payment before ever getting started on the loan. And that's something that you need to consider. Now, if that's difficult for you to understand, I'm going to break it down here in numbers, to help make sense of it. So if you're buying a $350,000 property and you're putting 3.5% down, that's going to be $12,250. That's 3.5% of $350,000. So you're left with that loan amount there of $337,750. That's the amount that you would be financing until you add the upfront mortgage insurance premium back to that loan amount. So in this case, 1.75% of $337,750 is $5,910. Now that's added back to that $337,750, and that is the amount that you're actually financing. So out of that 3.5% that you put down, that $12,250, you only have about $6,340 in equity after getting started with your loan. Now, that's not really a big deal, again, as long as you plan on keeping your property for a longer period of time. But for many of you out there, you're thinking of getting in an FHA loan, as a starter loan, as a starter home, and maybe selling your property in a couple of years and being able to upgrade to another property. Now, understand that might be viable. It might be possible in markets out there if you see appreciation. But what happens in a market that doesn't appreciate, or in a market that potentially pulls back in price? Well, you might be upside down on your equity in this case. And that could be a huge negative for you, especially if you have to sell your property, right? If you're in a position where you don't have equity and you have to sell your property, you either have to pay that money out of your pocket in order to sell it or do a short sale, which could end up affecting your credit. So if you're, considering purchasing a property and you're using FHA, just understand there is upfront mortgage insurance that is added on to the loan that you can't get rid of. It happens on every single FHA loan when you purchase or refinance. So just understand, if you're using an FHA loan, you're going to have that upfront mortgage insurance premium that I mentioned, in addition to the monthly mortgage insurance premium that's required every single month on an FHA loan. And that's going to take me into the second thing that you need to be aware of when using an FHA loan, and that's that you're going to have mortgage insurance on that loan for the life of the loan. So if you only put 3.5% down, you're going to pay mortgage insurance on that loan for the life of the loan, even if you get 20% equity in that property. Now, FHA does have an option. If you put 10% down or more, the mortgage insurance would fall off after the 11th year. But most people using an FHA loan are doing the minimal down payment, which is 3.5%, which means you're going to have mortgage insurance for the life of that loan. Now, you might be in a position at some point in the future where you get enough equity in that property and you refinance into a conventional loan and get rid of that mortgage insurance. But again, if you're in a market that doesn't appreciate or depreciates for whatever reason, the housing market stalls, then you're going to be in a position where you're going to have that mortgage insurance every single month. Now, it's not a huge deal as long as you understand that going in. As long as you're comfortable with the payment up front, you've got money in the bank, probably not a big deal. But if you're stretching yourself to make that payment work with the expectation that you're going to be able to refinance in a couple of years and get rid of it, and that doesn't happen, that could put you in a in a bad scenario. So understand, if you're using FHA, you're going to have mortgage insurance on that loan for the life of the loan, unless you put that 10% down like I mentioned. It falls off after the 11th year. The third thing that we're going to talk about in today's video is a limited property selection, right? When you're using an FHA loan, you might be limited in the properties that you can actually purchase with that loan, especially if it's a condo. FHA requires condos be FHA approved, and in some markets out there, all of the condos in that area are FHA approved. In other areas, you might only have a select few that are FHA approved. So if you're looking at buying a condo, you might only have limited options because all of them might not be FHA approved, or in some cases might not be able to be FHA approved. So that's going to limit your property selection. In addition to that, FHA doesn't really require you to purchase properties that need a lot of work with the standard FHA loan. Now, they do have a loan, the FHA 203K, that allows you to purchase and do a remodel, which we're not going to talk about in this video. But if you're just using the typical FHA loan, you might have a limited property selection when purchasing a home, especially if that home needs work, because FHA might require that work to be completed prior to the close of escrow. And in this market, that might be difficult to do. So understand, if you're using FHA, you might be limited in what you can actually purchase with regards to a property. Before getting into the fourth thing, I want to ask a favor. If you find any value in this content at all, give me a thumbs up. Consider subscribing to the channel if you want more information about FHA or just real estate in general. And do me a favor, share this with anyone that you know that might be looking to purchase a home using an FHA loan. Now, the fourth thing I want to talk about today is that FHA has loan limitations with regards to the amounts they're willing to lend in certain areas. Now, depending on where you are in the United States, your loan limit might be different. Here in California, you can get an FHA loan up to $822,375. Where in other areas of the country, you might be limited to a loan amount of $356,375. Now, that might not seem like a big deal depending on where you're purchasing in your market, but if you're considering using an FHA loan and you're in one of these markets that has the lower loan limit, that 356, if you will, that is the most that FHA will allow you to borrow. So if you're looking to purchase a $500,000 home in that market, FHA would not be an option for you. So understand, if you're considering using FHA, there are loan limits, and you need to know those when going into the process so that you're not, dead set on using FHA and find out that you can't use it for whatever reason. Now, FHA does adjust their loan limits every year, typically upwards depending on what's happening in the market. So if you're on that threshold at the moment, stay tuned, as their new numbers will come out here in a couple of months, which will essentially allow you to finance more using FHA. But currently, that is definitely a limitation when using FHA, so make sure you're paying attention to those numbers. Now, if at this point in the video you're considering using an FHA loan, you want to get qualified to see if you can actually move forward, you don't have a lender, do me a favor, click the link in the description below. I'm happy to refer you to somebody that I know, that I do business with, that does business the same way I do, that's familiar with FHA and can guide you in the right direction. And the last thing I want to mention in today's video with regards to FHA is that in some real estate markets at the moment, it's very difficult to get your offer accepted when using an FHA loan. A lot of sellers out there have this stigma with regards to FHA. They have a belief that it's only for borrowers with low credit scores, borrowers with low income. It's kind of a first-time home buyer type program, when in reality, it's not at all. But unfortunately, a lot of agents, a lot of sellers don't truly understand the program, and they look down upon it in many ways. So if you are a buyer using FHA, you may have a difficult time getting your offer accepted when you're competing against other offers. Now, if you're the only offer, chances are you're not really going to have those issues. But if you're in a multiple offer situation and the other borrowers that are going against you are putting more money down, 10%, 20%, or maybe even using a conventional loan, then you might be in a more difficult position to get your offer accepted, right? It's a little bit more challenging in some of these cases because you're putting less money down. And when you're competing in a very competitive market like the one we're in now, it's difficult to convey how well qualified you might be when you're up against offers putting more money down. So just understand, if you're in a competitive environment and you're competing against offers that aren't FHA, it might be difficult to use that loan. So just keep that in mind if you're comparing, using FHA versus conventional and trying to figure out which is the better option. for you. Just understand that in some cases, getting FHA offers accepted is difficult. So hopefully, those things that I mentioned there don't scare you away completely, but actually give you, the information that you need in order to make informed decision about using FHA, whether it's the right loan for you. And say you're considering it, right? And you just want to know what the other qualifications are, what credit scores you need, what income do you need in order to get an FHA loan if it is something that you want to consider. Do me a favor, check out this video here. I go over the FHA qualifications. I break them down in more detail to help you truly understand what you need in order to qualify for an FHA loan. But if you have any additional questions, do me a favor, comment below. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.